Up. We're about 30 minutes to the opening bell. And let's start with Kevin Hincks, co-host of Fast Market Live from the CBOE. And I woke up this morning, I saw the green. I knew we had sort of some wild swings overseas, Kevin, and I had to wake up again and check again. And it's nice to see some up arrows for folks again this morning after a winning week last week. Your thoughts?
Good morning, Nicole. Yeah, well, the news over the weekend about President Trump rolling back some of the tariffs, maybe there's speculation on temporary, but I mean, think about it. iPhones, computers, semiconductor chips, those are all a big part of the U.S. economy, and it fueled a pretty, strong rally Sunday night in futures and into this morning. And you've got Apple up over $12 to start the day. You've got a lot of the large cap tech names higher on a week that we're going to have to get all this done in just 4 days, Nicole, because of Friday's holiday. Now, we do have a small amount of economic data, retail sales coming out Wednesday morning. We got more banks. We'll get Bank of America and Citi tomorrow morning. We already got Goldman. They're higher pre-market. I think that overall, some of the earnings, Netflix will be the big one, obviously. We'll get some more of the airlines, United coming out with earnings. So it's a fair amount of data all packed into 4 days, Nicole. And again, I didn't even mention the most important part driving these markets right now, which is headlines coming out of the White House.
Well, you mentioned it a little bit. I mean, you mentioned the exemptions of the tariffs a little bit, right? But here's the thing. I mean, it's not a blanket exception. I mean, to your point, you said, look, it could be temporary. There were different levels of the exemptions. They're going basically taking off the toppy, frothy ones and putting them in a different tax bracket, which was lower. But it was enough to sort of do a refresh, a restart, a feel good on tariffs, except if you're China, right?
Exactly right. The Trump administration is acknowledging that they'll probably be okay with progress towards moving production to towards the U.S. and out of China, and progress. And it's not going to be a 1 week or a 1 month progress. It's going to be over time. So I think that's remember this administration makes big statements and then they work back, just like the market goes to the worst case scenario and then works forward. I think that's what we're seeing right now. But during all this turmoil and all of last week's crazy markets, the S&P was up 5.7%. The NASDAQ was up more than 7%. So we're starting the week in the green again after what, all things considered, when the final bell rang, a pretty solid week for the markets last week as well, Nicole. So I expect more headlines. I expect more volatility. The VIX is still sitting above 30, even though it's down 5 and change in terms of points this morning. It's still above 30. So there's a lot going on here. You mentioned the dollar already, that is sitting now 99.70. Crude oil has rallied a little bit. Yields are relatively firm, around 4.4%. So, ring the bell. Let's go. Let's see what we got today, Nicole.
And everybody's lined up here. We're going to have John Corpina from Meridian Equity Partners shortly. I just went into the booth there. They have everybody lined up, ready for a busy week, a shortened trading week, as you noted. Citi downgrading the U.S. market as Goldman Sachs is upping gold. Very interesting, right?
Yeah, I think Citigroup coming out and, putting what a lot of people have already done, a cautious tone on the U.S. economy going forward. Why? Well, because there is uncertainty, and this is what happens when uncertainty hits the markets. You've already seen it from some of the guidance out of fourth quarter earnings. The guidance what was very conservative and cautious. So I expect a lot of that to continue. But as we get into earnings season, I want what these CEOs are looking at for the second half of the year, because that's what stocks do. They look forward. So I think, remember, we're still going to have that discussion between soft economic data, like we got ridiculous consumer sentiment number on Friday, versus the hard data, which is all showing a pretty strong U.S. economy. So I think there's more discussion going on there, but we're going to get a little data. We're going to get some earnings this week. We're going to get some Fed speakers, all going to be lumped up into a big pile, and we all got to get it done in 4 days, Nicole.
Yeah, and look, I mean, Goldman Sachs saw its profit rise 15%. It topped estimates, and that stock is up 3% right now before the opening bell. Couple that with good news on tech. When you have financials and tech going, I mean, energy would be the third, but it's doing okay. That's a good sign for bulls, isn't it?
Exactly right. And remember, there's a lot of concerns about inflation, but you just mentioned a key participant in inflation, which is energy. And energy is down 15% in 2 weeks. Now, it's up off some of the lows. It got down as low as 55. Now it's up around the 62 level, but still significantly lower than it was. And it's going to be very hard, just like we got in the data last week. It's going to be very hard for inflation to tick up when you see energy, which is such an important part of it, coming down. So I just think things are not near as dire as the media would like to portray. I think it's a very tradable market. Doesn't mean we're going to fly to new highs, but this is certainly a tradable market that is choppy and volatile, and at least for last week, working its way higher, and again this morning.
Right, understood. Kevin Hincks, all right. I think they heard you ring the bell. They're going to in exactly 22 minutes and 24 seconds. Kevin Hincks, great to see you. Thank you.